information that the average person has no idea is going on.
Got to talk about money. Tax avoidance is a key skill to building wealth.
He said tax avoidance, not tax evasion, y'all. Tax avoidance. Just keep that in mind because that is a key word. All right. Avoidance is cool. Evasion will get you sent to jail. Keep that in mind, y'all.
And by the way, we don't talk about, I speak openly about I won't call it tax avoidance, but my tax strategies. If you're, it's like they said, if you're a prisoner of war, you have an obligation to escape. If you're trying to build wealth, you have an obligation to pay as little tax as possible. Do it legally, but Apple will issue their IP to Apple International in Ireland, and then they will use Apple Ireland. They will license their IP to America, charge them tens of billions of dollars, thereby increasing the income of Apple Ireland at a lower tax rate and decreasing the income in the U.S., thereby lowering their overall tax rate.
So that's more of a sophisticated way to shift your income into a lower taxable jurisdiction. They call that income shifting. It's really advanced. It's not for your average everyday person. I'm not going to sit here and say everybody should try to start a corporation, open one up in one country and do business in another. I think that's just too much for your average everyday person who gets up and goes to work 9 to 5. But he makes some other good points.
That is pure tax avoidance. Every organization, every corporation does this to the hilt, and so should you. By the way, I will vote for people who have an alternative minimum tax. We have to raise taxes on corporations. The 25 wealthiest Americans pay between 6 and 8% tax rate.
What are the tax games they're playing?
Oh,
the rich people.
There's a bunch of them. First and foremost, it's you buy stocks, you never sell them, you borrow against them.
Okay, explain that to me like I'm a 10-year-old. So
sure, you own $100 in Amazon stock.
Yeah.
You need money to buy something instead of selling the stock, and say it's gone up 50%, I say it's doubled, you would have to realize a capital gain and pay long-term capital gains on that $50 gain. No, just borrow against it and let the stock continue to grow. And you pay a little bit of interest, hopefully from your current income, but basically it's invest, borrow against it, and die. Put it into a trust and then pass it on to your kids. There's a lot of...
Now, everybody wants to talk about trust these days. Sorry, y'all. Most people don't need a trust. Most people can't afford a trust. However, this guy is super rich. He's made over 10 non-figures throughout his lifetime, sold a business, made a bunch of money, gets paid a whole bunch of money for speaking engagements. However, the idea of invest, borrow, and die is a pretty sound one. Might sound morbid, but what it is that you're getting an asset, whether it's stock, it can be real estate, it can be a business. And then instead of selling that business, selling that stock, selling that real estate, you are going to borrow against it because it has some value and you can use it as collateral to a bank or some other kind of financial institution. And so you can get cash out for it to use it for other things. And so again, instead of selling it, because what happens when you sell, you're going to have some kind of taxable event. Now, sometimes not all taxable events are bad. Some are really, really good. Some can result in a loss, but some can result in a gain. And that gain is what you want to steer away from because it can cost you a pretty penny. It can cost you a pretty penny. And then talking about dying, the beautiful thing about death, and forget about estate tax right now, this regular income tax. I won't bore you all with that. When you die, your heirs then receive that asset at what's called step up in basis, meaning that they will, on paper, the IRS will say, you brought this piece, asset, stock at the price it was valued at the time of death for your loved one who passed it on to you. So for example, I've been talking to you all about my father passing, and he left me his property. So at the time of his death, or the date of his death, I then get to recognize that my value, or what's called my basis in this property, is the same as it was the day that he died. And then so let's say the property is worth $100,000. The day that he passed, let's say it was for $50,000. I want to sell it I only pay tax on $50,000 instead of $100,000, right? I don't know if you can just add that up real quick. That's really, really powerful. Now, if you don't sell it, because the goal would be to then do the same thing that he did in the previous generation, buy it, borrow against it, then die and pass it on. So you never pay any tax on it. It can be really, really powerful. The problem is most people can't do this. Most people can't do this because they don't have enough income to sustain themselves throughout whatever issues in life they're going to go through. They don't have enough money to sustain themselves if the car breaks down, if the roof falls in, things like that. It is said that your average American, and there's a couple of different studies out there, but your average American doesn't have $400 to deal with an emergency. There's another study out there saying that your average American doesn't have $1,000 to deal with an emergency. So what should you do? Well, when you have an opportunity, you should be saving money as much as possible, put it to the side. And then when you get the opportunity, you buy assets. Then you take those assets, you borrow against them. But here's the deal. I see people do this a lot and they mess it up because when they borrow, they don't put money aside and then buy more assets. Many times they get the money, they buy dumb stuff, they buy cars, they buy jewelry, they go on vacations to all these fancy exotic places. Listen, I love a great vacation too, but I ain't made it to Hawaii yet because I can't afford it. So, I got to do a staycation here in the city or do something that's reasonable that fits my budget. But